Hello, everyone. Welcome to the FTX podcast. Round two, fight with Anand. Welcome, man. Good to have you on again.
Likewise, man. It's been a minute, but glad to be back. I know we've been trying to schedule this for a while, so glad we're finally doing it.
Yeah, it's been a minute, which is good though, because people can listen to the first episode, learn a little bit about how Paradigm was just starting, and now take a look how things are going and see the contrast that a year and a half makes. But, not to get ahead of myself, would you mind introducing yourself to the audience real quick?
Yeah, for sure. So, hi everyone. My name's Anand. I'm co-founder CEO of Paradigm. Paradigm is a liquidity network for derivative traders across CeFi and DeFi. We are just over 3 years old. We are known for options. So if you trade options, we typically account on any given day for about 30% of the global options volume. We have at this point, I think we're probably the largest and the fastest growing institutional liquidity network in crypto. We have about 2,500 institutions on the platform. 500 of them are active, 250 of them are very active. We've just launched our futures business with FTX, which we'll talk about. That's been super awesome, just gotten off to such an explosive start. And we have some, we're just starting to get our feet wet in DeFi as well. So yeah, that's the short and sweet intro.
Very awesome. Yeah, perfect. I mean, I think since Paradigm is very much sort of a product, I think it'd be very interesting to hear what Paradigm is, how you see it, and the things that it's doing right now.
Yeah, so I see us as really being a service provider. I mean, we are
Okay.
two things. We're a liquidity network and we're an infrastructure, right? And it's auction infrastructure combined with a liquidity network. And the one service we provide today is liquidity, right? Internally, we like to say it's liquidity as a service because our vision is, you should be able to consume micro financial services, which is a term we're sort of using internally now, the same way you consume compute on at AWS or places like that, because as the world sort of becomes increasingly, so this idea of network states sort of is growing. People sort of constantly need liquidity for whatever activity it is that they're doing, and everybody tends to build their own marketplace. Our goal is to say, you know what, you don't everybody doesn't need to build a marketplace. You can consume this thing on demand and embed it within whatever service and network or ecosystem that you're sort of building, right? Today we started off our roots were in CeFi, but now we're sort of we're doing some really cool things in DeFi. So for instance, this idea of people consuming this service, DeFi protocols today are actually using this. So Ribbon Finance, which is a big DOV protocol, you probably heard about. And so they basically rent our auctions every week, spin up an auction on demand, and then basically are able to seek liquidity from all the people on our network, right? And we're now replicating that with Katana, and there's a bunch of others we're trying to work with. But it's very much sort of this idea is materializing in the sense that we're not only are we talking about it, but we're also now doing it in DeFi, which is very very cool to see. And all of that's happened very very quickly. But that's just crypto, right? It's just people here move so fast. It's incredibly exciting.
And if you had to describe Paradigm to a 5-year-old, like, how would you describe sort of this function, this liquidity as a service?
Think of us as a wholesale marketplace that you can consume. And the main service that you go to this marketplace for is liquidity. Our vision has always been trade anything with anyone and clear it anywhere, right? That was sort of, that's how we were started. And that's the single thing that sort of, keeps us, it's like our anchoring. So it's sort of like North Star. Initially we started out as, that thing, but focused on options. But now, of course, we've expanded to other assets. But we're also sort of extending that idea now and making it an embedded financial service. But the idea is anyone should be able to consume wholesale liquidity on demand. And then that liquidity should be agnostic to dealer, asset, venue, network. Doesn't really matter to us. We want to sort of provide both the infrastructure as well as the liquidity that sort of the network that actually gets you that powers that liquidity.
hmm So let's say I want to buy some call options on Bitcoin. And I have a Paradigm account. I'm signed up and everything. I come and I put out RFQ to the world on what I'm
Mhm.
trying to buy, and then someone responds to me.
Correct. And so effectively, you will come onto Paradigm, you choose the venue. So like I said, we're agnostic to venue, so where you settle, agnostic to asset, what the product or the asset is, and agnostic to sort of dealer and asset. So you come to Paradigm, you choose the venue, choose the asset, choose the structure, let's say call spread, put spread, whatever. And then you say RFQ, and instantly we will spawn up markets for you, and you can consume those markets sort of, on demand either. And we have a couple of different liquidity protocols, but the overall idea is exactly that.
Got it. And then how does settlement happen? Do I have to deposit collateral? Am I using the collateral for my first venue that I selected for this
Mhm.
trade, or?
Exactly. So by selecting a venue, you're effectively saying to us, like, my money is kept here. Please use this as the method of settlement, right? And so we sort of know that, and the thing that links us to your money or your collateral is your API key in the sense of CFI. But in the case of DeFi, we can swap things directly out of your wallet. So there's no need for sort of an exchange intermediary. We're able to swap things directly directly out of whatever wallet you support. Today we support a few chains. We're going to try and expand that, but the idea is the same in DeFi as well.
Interesting, because you just give me a transaction. Once I sign that transaction, you have authorization to do the movements of money. Oh, that's very cool. Yeah, I'd love to hear a little bit. So it's been a long time since we talked. I know you guys were starting to get some decent volume the first time we spoke. I imagine that's probably increased a lot, especially through the bull market, and maybe come down a bit now. But would love to hear some figures around like volume or how the growth has been over the last year and a half.
Yeah, absolutely. Dude, we've been super fortunate that even in the bear market, we've seen some tremendous growth. So for instance, in Bitcoin terms, from January to now, we're 5x our volume. So you can see here, in January we were doing, January, February, we were doing about 150,000 a month in Bitcoin terms. So you can see September we did 525,000. FTX is right up there. You can see this big red. That's all FTX. We've diversified not just in terms of venue. So so obviously because we were an options shop, people we were very much focused on options in the beginning. But now since the launch of our futures business, FTX is almost 20% of our volume now, and growing. And with FTX, obviously came not just we diversified away from options, and now you can see here we have both spot and futures as well. So yeah, it's been pretty awesome. It's a fun ride. Like I said, we've been very fortunate in the bear market that our volumes keep increasing, and it's not gradually. It's been quite significant. And I think what we attribute this to is really institutional participation, right? Like even in the bear market, especially in options, we've seen bigger firms, more bigger firms coming on and putting on more size, and we've benefited from that because on a relative basis, as retailers sort of decline, institutional participation has risen, and as a result, our market share has also risen, with that, and then also sort of with the launch of our new business spreads. I think also as the market has kind of been, quite icky over the last few months after the Luna and 3AC and all that, and so there's been sort of a need for other ways to find yield, right? And I think what the spreads business does so well is even in this market, it allows people to sort of extract yield in these sort of new ways, and I think that's also sort of a sign of maturation in the market, right? You can't just be directionally long or short. Now there's things like spreads and so on and so forth. So to me, that's just a signal that the market's just evolving one more step, in its journey.
Yep. Oh, wow, this is super impressive, man. Really happy to see this.
Thank you, dude.
Because you'd expect the trend to be very, very different during this bear market. So just to make sure I understand, you guys have now, the first time we spoke, it was options only. You've now added spot and futures. So it means I can come on and put are these quarterly or are these perpetual futures as well? Anything?
It's anything. So you can look at, so this is a really cool display here, but let's say FTX, right? For instance, we basically add spot as a point on the term structure. And so you can see spot, perp, and the dated futures all together, and we just create a sort of a matrix. And every tile here represents an order book on the cross. So in this case, this is an order book on the spot and the perp. And so
Yep.
if I open this up, you will see here that if I want to sort of buy or sell the spread, there's an order book available for me. That's always on. This is not RFQ. And sort of this is very much tailored to sort of the systematic guys. But it's really, it's been awesome. You can see here some insane size in the order book, right? You can see here that there's 884 Bitcoin and on the offer and 328 on the bid. And again, all of this happened in less than 60 days. So I've never seen anything like this. And I think there's real product market fit here. And the volumes. So we went from zero to, I think, 200 million a day in less than 40 days in the in the first 40 days. Last week or so, it's been down because this volatility has died. But our highest was 200 million a day.
Very cool. I mean, and for the listeners, a spread trade is when there's a dislocation between a futures market and the spot market, and you can capture that by being long on one side and short on the other side, and then they'll eventually converge upon expiry of that future. And then if you're doing a spread trade between the spot and perp, that is because there's a funding trade that you can be doing and collecting the funding.
So you're basically mining the funding or the basis if it's a future. And it sort of goes both ways, right? We've sort of seen people. We put out some stats some time ago on FTX. I think one of the cool things about this product is it really allows people to fully use an exchange. So like what really works here with FTX is you guys have sort of unified margin, right? And I think that's one of the, it's probably the best in the industry. But what you can do here is you can literally come on here, put on this trade, lever up, like 3 or 4 times and get like very significant APY, right? And the risk of liquidation is there for sure, but it's like the liquidation points are super high. And so, I think that's really working for people. And so again, like I'm saying, it's like it really we sort of like allow you to sort of fully use FTX, if that makes sense, right?
Yep.
Because otherwise, previously you were sort of aggressing on one order book, going to the other order book, then you don't really know, then there's leg risk, you make one leg, take one leg, it's really cool. And so what really worked, one interesting point, which even sort of we did not foresee. So as you notice, there's some insane size in the order book, like, even the top of the FTX order book, but that's because it's an outright, it's sort of different. But what's really working here is you have fund guys expressing a view. So they're basically like, placing these orders on a spread, and then there's HFT sort of aggressing against that. And so what makes that work is because this is a delta neutral trade, meaning like I'm long spot, short the future, or vice versa. I have no market risk, and so the size I'm willing to post is very large because I'm market neutral, right? And so that allows these guys to remain there. And you can see the order book is sort of very sort of stable in that sense. It's not sort of moving, and it allows HFTs to sort of aggress. And so there's this perfect asymmetry of fund guys who have a view on funding, but they're not necessarily HFT. And then there's the guys aggressing against that are the HFT. So it's asymmetry is what makes markets work. I've always believed that, and so this is sort of a perfect embodiment of that idea.
Yeah, it makes a ton of sense. I mean, and for the listeners, the reason Anand said the liquidation risk is low, even though you have a futures position on, is because you have the inverse position on the other side of the leg. So if you're short Bitcoin with the futures, you're long Bitcoin with the spot. So if the price of Bitcoin goes up, you're not going to get liquidated on that short because your collateral value will go up at the same time as well.
Yep. Exactly.
Yeah, this is super cool. I hadn't come in and played with this. This is really fascinating. I'm still a total noob, to be honest, but this is like really, really interesting. And one thing you were talking about there about the leg risk is, did you mean like if I'm going to put on like like $1 million position on each side of this trade, and I go and I get failed on like the futures market. Someone may have, let's say it's bigger size, whatever. Somebody's noticed what I'm doing. And so then all of a sudden that liquidity dries up on the spot leg that I want to do. And then I can't like hedge it perfectly.
Yeah, and usually the way to enter into a spread trade is you do strong leg, weak leg. You market make one leg, so you keep a resting order, and as soon as you get given on that, you basically take aggressive on the other to minimize your chances of being hung on one leg, right? But that's still very much like a best efforts basis. The market can rip, liquidity can sort of evaporate. That leg risk, that is leg risk, right? And so with Paradigm, you have no leg risk. It's guaranteed by the design that both legs will execute atomically. But that's because we utilize a block trading endpoint which bypasses the order book and goes directly to an exchange's risk engine, and the exchange's risk engine processes that trade by clearing both legs sort of atomically, right? And so because we guarantee that atomic leg execution, you can see here the makers or the people posting orders, they post really large size because they're guaranteed that they'll never be leg risk, and they'll also show super tight. So you can see the top of the order book. If I try to do this on screen directly, is like $2 wide, right? 0 and
Mm-hmm.
2. We're $1 wide, and we're almost like 300 times size on this and 800 times size on this, right? So just like the spreads change the risk profile of an instrument, and because of that, it changes sort of market behavior in terms of how price formation occurs for spreads.
One thing I'm curious about is like, obviously this is a super useful product, as you were saying, for funds and, large individual traders and these different entities. What does it look like to get these people onboarded to your platform? Is it like a huge BD effort? Like how has that been systematically?
No, that's actually one of the coolest things about the platform, because we rely on, basically we leverage the fact that anybody coming to the platform, and let's say we support FTX. If you have an account on FTX, you come to Paradigm, you generate an API key on FTX, and you give us block trading permissions for that key. You stick it into Paradigm, and you're good to go. No, we don't do any sort of like onboard KYC effort or any of that. Why? Because we can leverage the fact that you're a customer of the exchange, right? And
Yep.
then we check via the API, from the API key, whether the customers was KYC'd or not. Most exchanges automatically don't allow you to generate an API key if you're not KYC'd. And so from an onboard perspective, so there's 2 points of friction we solved for when we launched the product. One was no onboarding friction. We said, hey, we want to be as close to being permissionless as possible. So you come in, you stick in your key, and you can trade. And B, cost-wise, so we don't charge you any extra fees or other than what you pay the exchange, right? And then the exchange just basically shares revenue with us. So you have
Got
large
it.
size, better price, atomic leg execution, no onboarding friction, and no cost friction, right? So we've really tried to make it like as seamless as possible.
That's really cool. Yeah, I was about to ask about the fee model, but that makes sense. You just do rev share with exchange. Do you have any of these dashboards for DeFi already, or is that still under construction?
So we do basically the auctions I was talking about, where these DeFi
Yep.
protocols are spinning up auctions. So you can see the Ribbon auction. This is our production environment, by the way. You can see Ribbon is spinning up auctions, on demand, and then basically it's an RFQ, right? And people on the platform and the network can bid on these auctions, and sort of win these tokens that these guys are auctioning off, right? Ribbon is the first protocol. We go live with Friction in about a week or so. And then there's a whole other bunch of folks that we're trying to work with. There's this idea that we can probably allow full like game ecosystems to spin up auctions, privately, but from within, their world. And so we're working on cool ideas like that I think, because I think that's where the world is headed anyways, and that's where we'd like to be. And so yeah.
And would you say the core value proposition of Paradigm is to ensure that everyone has the liquidity that they need for the products that they need?
On demand liquidity, that's agnostic to asset dealer venue network. That's always been like, nobody should have to every person that tries to build something has to bootstrap liquidity themselves. We've solved that problem. Just consume it, right?
Yep.
The same way Amazon solved compute. Everybody doesn't need their own data center, right? We've solved this problem. Everybody doesn't need to worry about incentivizing market makers and not making sure their auction models are not gameable and all of that. These problems are solved. We don't all need to reinvent the wheel. Just consume it.
Yep. And one thing that we've said a lot is liquidity. And I think, in our world, that makes a ton of sense. I think maybe for some listeners, doesn't make that much sense. Would you mind just saying how you describe liquidity, or like why liquidity is so important for market participants?
Yeah, I mean, liquidity is sort of the fuel by which all capital markets work, right? And liquidity, sort of in the simplest terms, is the willingness of buyers and sellers to basically take on trades, right? In sort of the simplest terms. That means when I go to a marketplace, when I want to buy, there's somebody else there ready to sell. In traditional capital markets or even in crypto, market makers perform this function of housing inventory on staying basically in between and saying, okay, you want to buy, I'll buy from you, and hey, you want to sell, I'll sell from you, or sell to you. And that, both those trades might be separated from points of time, and that's why you need sort of an inventory function, and that's what a market maker usually performs. But a market maker is not the only one that provides liquidity, right? They could also be end users that have naturally are long or short a particular, like a commercial user that is long or short Bitcoin, like a miner, for instance, that they are just like long Bitcoin because they're miners, and they want to be, and obviously when they go to market, they need to be short because they're selling it to gain money, right? And so liquidity is your ability to seek to find the other side of your trade on demand when you need it, right? So immediacy is so size at the price you want, and immediacy is sort of a concern. Is like the three factors that go into it. And the strength of a marketplace is someone's ability to go to a marketplace and find that other side very as seamlessly as possible.
Yeah, and to give an example, like let's say you have some Bitcoin and you want to sell that Bitcoin, have 100 Bitcoin, and the order book says, oh yeah, the price of Bitcoin right now is $1,000, but to sell that 100 Bitcoin, you actually got executed or filled, or the willing buyers only bought at $900. Now all of a sudden you lost 10% versus what you thought you were going to get off that sale. So it's just like super important for traders to be able to get in and out of positions adequately.
Yeah. Yep, exactly. And like that's the strength of the price discovery protocol, whether that's a central order book, whether that's an RFQ, whether it's the dark pool. These are just different ways from around which price forms, and all basically are solving for you don't have slippage, market impact, things like that. But the goal is to sort of like get you the price that you want at the size that you want, on the structure that you want, and on the venue that you want, right? And usually you shouldn't have to compromise on those, and that basically tells you like how strong a venue is in terms of liquidity.
Yep. Yeah, that makes a ton of sense. Do you want to close the share screen down so people can see
Yeah.
your pretty face again?
For
Um,
sure.
what are some other DeFi things you'd be curious in adding over time to the Paradigm platform? Like right now, obviously options is like a good starting point. Are there other things you're interested in?
Yeah, and so this model of having a consumable financial service sort of on demand, it doesn't really apply to options only, right? Because everything can be represented as a token. So
Mm.
whether that's an NFT, whether that's a future, whether that's a spot, like it doesn't really matter. All you're doing is to us, like a token is a token. That token represents an option. An ERC20 token. It doesn't really it makes no difference to us. And so right now we're known for auctions, but it doesn't make a difference to us whether it's spot. And in fact, when we roll this out and we actually make this sort of a financial service that you can embed, we'll roll it out, spot and options and futures, or at least like the first few basic primitives that people will need.
And something you said there was actually pretty curious. In a world in which, let's say, NFTs get to the point where like large volume traders are actually very interested in putting on positions with them, would you be able to also set up a system where you kind of, it's like essentially kind of like what SudoSwap does to some degree, where you're like, I want 10 of this NFT, even if it's non-fungible,
Yep.
and I'll pay this much, and somebody can come and fill you.
Yeah, exactly. And the other sort of less appreciated use case is like, let's say you're trading a super expensive NFT or super valuable NFT. You don't want to do that on OpenSea because of the fees, right? And so like, if you're paying 5 million for something and paying 2% or whatever the crazy fees are on some of these platforms, like you'd prefer to do that trade OTC, right? And so there's things like that start to matter. You also might want to sort of not have the fact or not signaling, this cost to signaling. So you don't want to like just put it out there and say, okay, you know what, this guy is like selling this, and now everybody's like, whoa, what's happening, what's the information behind this, right? And so things like that. So again, the same principles that apply to why OTC works in some of these other markets, they're applicable to NFTs as well.
Okay, that's super interesting. This might be a domain you don't think about very much, but it's also something very hot in discourse right now. And I'd love to hear your perspective on sort of NFT trading, the state of NFT trading right now as a trader. What do these assets feel like to you? Not from the culture perspective, from the community perspective, but as like tradable assets. How do you see them? Do you think they have a place in the world from that perspective, or they purely have a place from like this collectible art perspective?
it feels scary. It feels scary because I'm hearing of things like NFT market makers being spawned and you're taking inventory. I mean, we're talking about super illiquid things, right? So the inventory risk on something like that, I came from trading. It's all about sort of the risk that you can sit on and house, and it needs to be parameterized and measured. Like, you don't know any of this stuff in NFTs. It's like it is whatever you say it is. And so it's but like I look, culturally obviously belong this space. I think all of these things are cool. Would I do it? Would I be an NFT market maker? Probably not. But I know there's people out there willing to do this stuff, right? And just like in anything, right? I think there's always going to be a sort of segment of people that will want to be, who think the return is justified, right? And if you look at some of these returns these guys make sitting on this stuff, it's quite a lot. So I mean, all power to them. It's like I'm not here to sit and judge. Myself, I'm definitely scared. So yeah, I'm not. You're not going to see us spawn an NFT market maker anytime soon.
And what about from the perspective of like, there's this whole thing where to some degree NFTs are becoming hyper financialized in the sense that, especially on Solana, we're seeing a lot of sort of like AMM NFT trading, zero fee NFT trading, kind of them being treated zero royalty NFT trading, essentially them being traded as fungible tokens rather than the non-fungible tokens that they are. Do you think that's just the direction things trend to as the market becomes more mature, or maybe it's a blip? Do you have any sense?
So I don't know whether that's a function of evolution as much as that's a function of sort of like speculative things that people can do because there's excess still in the ecosystem. I still feel that there's a lot of excess in the ecosystem, and if there's excess money wise, resource wise, capital wise, people will gravitate towards the crazier things, right? And crazy is a bad word. It makes it seem like it's wrong because I'm not saying it's right or wrong, but there are speculative use cases, and there is no, at least to me, there is no analogy to the old world where I can say that, okay, I mean, yeah, you can probably say the hyper financialization of products, just before the crisis, whenever 2007, 2008. But even those, like, I feel like they were still rooted in sort of like assets that you knew and felt and you could touch, right? In that sense, right? This is a whole new world, right? For a long time, people couldn't even get their heads wrapped around like, what is an NFT? Like, where does it accrue value from, right? And so, like, the crazy thing is, like, while we're still getting our heads wrapped around these ideas and sort of reframing our own ideas about what is value, you're also seeing these crazy products, and people sort of appear at the same time. So it's like, so all of this is happening at a zillion miles an hour, and you're like, holy shit! Like I'm like, wow! Like I'm just getting my head wrapped around this, and now you're saying this exists. Like, okay, hold on, like time out. So that's kind of how it feels to me. But like I said, there's people that can keep pace with that. As a builder, one of the things is like, that's what really pisses me off is like, I can't build things as fast as you see them appear in the market,
Mm.
right? And that's both a good thing and a bad thing because like it keeps you sort of like you just humble and you because otherwise you're going to go after every opportunity out there, right? But yeah, it's also at the same time you just like max FOMO. We're like, oh shit, that's cool. Oh, that's cool too. Oh, I wish we could do this. And like, oh yeah, of course we can do this, right? And so like you're always caught up in this thing, and like trust me, I'm always there. I'm always FOMOing, right? But it is what it is. It just comes with the territory.
Yeah, and this actually segues really well into sort of what I wanted to talk to you next, which is just like company building, organization, how these things work. I remember when we first talked, I don't know, there was like 9 of you guys on the team. How many people are on the team now?
90, so 10 times
Yeah, so it's
exactly.
like
Yeah.
10x. How do you do that? Like, how do you take a company of 9 people and 10x it to 90 people? Like, what things have you had to put in place for this to actually work? Because if it's you speaking to each of these 90 people, I'm sure that just doesn't scale. So
No,
what has been done there?
I mean, you just need a great team, right? You need a great team. You need a process, and you need to give people a lot of autonomy, and you need to trust people. And once you sort of develop, rather than telling people what to do, if you develop a framework, we don't do it perfect. I'll be the first to admit we're always learning, we're always evolving. Actually, we're smack in the middle of changing our organizational model again in less than like 9 months. But that's not because like not because things are not working or things are breaking, but we believe for where we're headed, we need to, the business model, the organizational model needs to reflect the business model, especially as I talk about moving to a services model and so on, so forth. We need smaller teams and so on and so forth. So, but like going back to your question, like you have to invest. Like the first thing we did was just invest in a really strong recruiting process, right? And like it took me a long time to figure out that, like, what, we like recruiting is the engine that keeps this thing going. And hire sort of people, develop a process, top of the funnel. Literally, we approach it like we approach a stack. What is the top of the funnel? Who's getting to the next stage? How are we interviewing people? Is there a framework? Are we screening for culture? All of that stuff. Then we started to really see that, like, oh, this can be done. But then you start, well, for me, the turning point was like, or like the moment sort of like I was like, aha, there was like an aha moment where I was like, you know what, this can be predictable. There is no, like, who says that, like, you're at the mercy of sort of the hiring market, right? Like if you invest in the people and the process and the systems, there is a degree of a significantly high degree of predictability where you can say, okay, I need this person. And then basically you turn on the knob, and then sure as well, hell, like 2 months later you have someone, or at least 2 or 3 people that you extend an offer to. And then once you start to realize that there is predictability in what was otherwise a chaotic process for us, at least in the early days, because first time founder didn't really know what's what. He was just trying to do everything at the same time. But then once you learn that, then you start to be like, okay, cool. And then of course you sprinkle in, we're very high on trust, we're very high on autonomy. We hire people and don't tell them what to do. We sort of make sure they're aligned on the vision. We basically jointly agree on what the goals are, and then they just go out and do it. I think that's a big reason why we've been able to, and we're also like 100% remote, or at least we were until recently. But now we're trying to consolidate in Singapore because we're growing a lot, and at least the people that are making the decisions need to be together, because your
Mhm.
access, like you guys are in the Bahamas, that access is just like allows you to move much faster. But yeah, so I would say all of those things, right? And like right now I can say all of those things because but like I definitely didn't know these things going into it. You sort of are constantly learning on the fly.
Yeah, there were two things there that you said that I thought were really interesting. One was when you were starting, first time founder, you were trying to do everything. How did you scale back from that? Was it just getting good people that you could trust to take care of certain things, or like what was the system there?
Yeah, I think it was a comment. I'd like to claim credit that there was like a one point of time where I said, "Oh, I'm gonna not trust people now." The reality of the situation is that, like, you're just forced to. Like you have 24 hours in a day. There's not much you can do. Like you have to prioritize in terms of, you're like, okay, there's sales, there's account management, there's engineering, there's product, there's hiring. You can't be focused on everything. It's just not possible. And so there was a time when I was like, you know what, I'm just going to focus on these things. We've hired these people. Let's do what the other founders out there talk about and trust people. And sort of like, you sort of come onto this thing, and then when it works for a couple of people, and you're like, huh, this actually works. Then you start to get more comfortable around that, right? And then you start to make it as part of your process. But the reality of the situation is, like, I wish I could say that, oh, there was this moment where, like, I just flipped. But honestly, it was just like prioritization. That, like, I could only focus on product and engineering and building fast and getting that to market. And I said, the rest will follow. And sure enough, stuff works. I think the other, like, the other sort of like thing that I think is sort of is like very egocentric, as a founder, is like you tend to think that, like, if I don't do something, it will completely break, right? Like if I'm not involved in the sales meeting anymore, the
Mhm.
process is going to break down. And yeah, that's just not true, right? Like it's like, if because there's so much else holding the company together, that, like, you not being there for one sales meeting, it's not going to change shit. Like, and then plus, if you've hired good people, they will keep doing what they keep doing. So it's just that. And so I think it's a combination of the realization of all those things coming together, and then also the circumstance forcing your hand, that sort of pushes you forward, and then you just have to be accepting of that.
Yep. Yep. That all makes a ton of sense. And the other thing you said that I thought was interesting was this second company reorg that you're going through right now. How do you do one of those? Like, where do you even start? Like, because it feels kind of like tenuous and up in the air, right? Because even in general organizations are always a little bit unclear.
Yeah.
So how do you look at it and say, okay, we need to restructure this, and where do you start?
So, we did a first restructure in sort of January, right? And we moved to what we call internally as business units. And we sort of had three business units. Well, we had three business units. We're just changing those. But it was like one for options, one for futures, and then one for our DeFi business. And that mainly came about because like we were getting to the size where we were like, 40 people, and like it just felt like everyone was working on everything,
Hmm.
right? And it seemed chaotic. It seemed like our size, even though we were only 40 people, like it seemed like we were getting our own way. Anything we asked for was going into queue. We're like, well, we can't do this because this thing is doing this, and there's a whole queue, and everybody's working on everything. And we were like, well, this can't work. We can't be 40 people and our queue. I shouldn't have to wait 6 months, because that's what we were like. It seemed like anything goes into queue, it's going to take us 6 months. And so the first thing we did was like, what, we're like, okay, we need segmentation and we need focus, right? And that also like allows people to take ownership and so on and so on. So we broke things up into three business units, mainly because like I felt like it was affecting our velocity. So it really came from our, just like this perception that if we continue to going down this path, we're not going to move as fast as we want to, right? And our North Star and moving fast is FTX. And so we were always like, okay, if FTX can do it in like, a week, then we should be able to do it within a week, right? And like early this year, it just felt like, we weren't there in terms of sort of our ability to self-organize and move fast, etc. And also being remote also challenges, it's quite challenging, right?
Hmm.
So then that was when we did the first reorg. But then, that was 40 people, and we broke it up into three teams. And, engineering wise, it was much smaller, self-contained teams with the PM and engineer. And it was like awesome because each team was not engineering product wise was not more than like 8 or 9 people, right? And that felt great because it's smaller companies, smaller fields. You don't really interact with the other person unless you're sharing some stuff. And then again, that allowed us to focus and move fast again. And that really worked for us for the last 6 months.
Hmm.
But now we're getting to that next stage where like these three business units are themselves getting big, right? We now have 50 engineers, right? And so like now again within these business units, we have to sort of figure out like, look, okay, we want smaller teams and ownership, and like we like this idea of two pizza teams that Amazon coined, where like their teams are small enough where they sort of feed two pizza, two pizzas sort of feed the whole team.
Yep.
And we were like, you know what, we're there now, and we need sort of to break it down even further, right? So again, this is also again need based, and now we've like moved to a model where we have two business units only from three, but within those business units we have very well defined smaller teams, and those teams sort of work with each other, and sort of they all work towards a larger goal. But we seem it to me, as I was going through this with our team, and I was like, damn, it seems like we're the things that Amazon and all these big companies discuss in terms of organizational model, we're having those discussions now. So I'm like, wow, like, are we getting this mature this quickly? Right? It seems weird, but I feel like if we don't do that, we won't be able to move fast, continue to move fast.
Yeah. How do you, so let me know if this assumption is wrong, but to form these sort of like two pizza teams, do you essentially take a look at everybody in your company and you think, okay, this would be a good team, this would be a good team, this would be a good team, and you kind of just like formulate it like that? Or is there a different principle through which you make them?
So we've structured teams around um, services, right? So we have the auction infrastructure service, right? Now we have this auction infrastructure that spans geo- RFQs or complex order books and spread order books. Now we have three auctions, and that in itself can be a business because owning it, maintaining it, improving it can be a team that is constantly doing that. So we say, okay, auction infrastructure, these three group of people that sort of know it best and sort of gravitate towards that kind of performance resilience, continuously like pushing the envelope of order matching and things like that. That is the team that will own that, because now that auction infrastructure powers the entire company. So it's like a serious thing. We need a dedicated resource. So
Totally.
we have auction infrastructure. We have a settlement team because we connect to all these different exchanges and DeFi protocols. We need some sort of unified clearing and settlement service that again spans. We've already built that, so we need somebody to build and own that. But then we have sort of like other teams, such as we have a mobile team, and so because set of mobile users is different. So again, we structure it around services and also like who's consuming those services, right? And people that gravitate towards those things, we all or have already done those things. We
Hmm.
tend to put, and then we staff a PM and engineering manager and a lead, and it's okay. And then we all agree that okay, here's our set of OKRs for the next 2 quarters, and then once we agree, then boom, we execute.
Last question on that. How do you see a PM's role? What is sort of like a successful PM doing?
We are a product-led company, so like
Mhm.
we are very like this is a question we answer, we ask ourselves every day. But a strong PM in the absence of a GM or someone that drives the commercial side, right? That connects you with the customer, and not the customer, that connects you with the commercial side of an opportunity. A strong PM sort of is a representative who sort of identifies, the opportunity and is like really a leading force. Like, so we have core teams for each service, but the PM and the technical lead are sort of like it's almost like CEO and CTO, right? That's how we define it internally. And we say, this is your service, these are your OKRs, and you got to own it. And some of these services, we're now starting to attribute P&L to them. And so, like, it's real. It's like you own a company now. And so, ultimately, we want to move to that model where, like, individually smaller companies like services actually have P&L that they own sort of start to finish, right?
Mhm.
And so like I was saying, like I think in the absence of a GM, PM is like a CEO. Now, when that service grows large enough and there's marketing and sales and all that, then you need someone like a GM, general manager slash CEO, to basically move away sort of that burden away from the PM so he can continue to work with the engineering team. But while you're small, I think you can get away with that.
Yep. Yeah, that makes a lot of sense. What does OKR stand for?
Objectives and key results. So we have a high
Objectives, key
level
results.
objectives. It's like it's like KPIs, but like a different version, different framework, but it
Yeah.
sort of achieves the
No,
same
I like the framing of OKR more than KPI. Um, what you guys had a raise not that recently, but what was the raise valuation at for the last round?
The last clip we did was in December at 500 million. We're in the market right now, actually, raising another round. We can't talk about it much, but
Hmm.
we're pretty far along in the process. Hopefully, we should have some good news soon. But yeah, it's we've been working for a while, and again, it was a function of, we 5 consecutive months of all-time highs. And we were like, there's this consolidation of mindshare we think that's going to happen in crypto for over the next 12 months. And there's also these super brands, right? Brands like FTX and Binance and so on and so forth. And I really feel like there's space for more, like a few more brands. And I really feel like Paradigm could be one of those brands.
Hmm.
And so we felt like while everybody's sort of like dealing with the bear market, we should be leveraging the fact that we've done well, and let's like accelerate, right? And then really sort of seek to capture this mind share. And so that was sort of the impetus behind the race.
Yeah, I mean, you're trending upwards when almost everyone's trending downwards. So I'm
Yep.
sure you'll get a lot of interest. Anand, are you gonna be a you gonna be a
well, well, no comment, but
no comment.
yeah, but hopefully we'll all find out soon.
Oh, amazing. Very, very, very cool to hear. Last couple of questions for you. So, um, one question is if somebody is a leader, a founder, a CEO in the space, down to a small team, to a big team, whatever, what are some words of advice you would leave with them?
Oh boy, you know, just be prepared, man. Like this shit's this shit's hard. Like it's not easy, and the bigger you get, the faster you scale, it just gets harder, right? Like it doesn't get easier. Like nobody, like it doesn't get easier. Like that's what I figured out, and partly it's like self-inflicted because as you grow, you find good people, they come on, they take on more stuff, but then you're like, okay, cool, I want to do more now, so like it is sort of self-inflicted in that sense as well. I mean, I guess you could just be like, okay, cool, I'm cool with this piece of the market, right? But if you continue to like want to build more, and we want to build, right? We're builders, we all love building, we have this vision that we want to accomplish. But yeah, man, it gets harder, it definitely gets harder. So but it's not meant to, I guess these words are not meant to discourage anybody, right? But like I personally, I enjoy it. I get a lot of validation out of knowing that like I'm going down the path that is hard, right? And that is sort of like the purpose of my life, right? And like that makes me feel good at the end of the day. And so like if you are that type of person that like derives sort of fulfillment from knowing that you did what other people didn't do, then yes, it's hard, but it's super rewarding, super fulfilling, right? And like I know that I will now never say that, like, yeah, you know what, I could have tried but I didn't. Like, I think that regret, I won't have to check that box, right, at any time. So I'm proud about that.
And my last question is, are there any sort of life lessons or habits that you have that you feel have improved your life?
And being an entrepreneur is all about managing your own psyche. Like, it's not about building product. It's not about doing all these cool things we're doing and working with cool people. Yes, it is all of that, but it is really about managing your own psyche, like how you react to other people. Are you are you sort of leading with empathy, and so on and so forth. I feel like I've grown as a person just on this journey, because it's forced me to be in other people's shoes and forced me to understand constraints and forced me to understand my own limitations about about anything else. So it's such a it's just a it's a it like puts you through the growth grinder in a very sort of accelerated way. And like, you either come out of that like being like, holy shit, like, no, or you're like, oh my god, like there's so much more. It's just this growth journey that it's sort of indescribable. But I think that's what this is about, and I've definitely grown as a function of that as a person. So that's why I always say to people, like, I was like, you know what, you want to grow, build something, pick something up, anything, build it, right? You will grow as a person. Even if it fails, you will come out of that better.
Thank you. And thank you for coming on the podcast, and on. This was great.
Likewise, dude. Thank you again. Nice being on here as always.